Good morning, I'm Guy Johnson. I'm alongside Kriti Gupta. We're an hour away from the opening trade. So what do you need to know this Thursday morning? Central bankers from around the world arriving in Wyoming for day one of the Jackson Hole Conference. Bloomberg will be speaking to many of them. PMI data from across Europe will be dropping this morning. We will be bringing you the key numbers, and we're going to try and figure out if they put another ECB cut in September on the table. And Tim Walz accepts the Democratic Party's vice presidential nomination on the third night of the DNC in Chicago, Kriti.
In the meantime, a quick check on these markets. When you look at the futures picture, seeing a little bit of red on the screen, but again, a marginal move down. Perhaps just kind of that light liquidity, light volume move that we are continuing to see throughout the week. Eurostoxx 50 futures and FTSE 100 futures both down by the same margin, about 1/10%. To me, it's still the currency story that catches my eye. As we price in perhaps more cuts down the road for the Federal Reserve, it's boosting European currencies. 111 at euro on euro dollar, 130 handle on cable. The countdown to the opening trade starts right now.
Thursday the 22nd, the week really gets going now. We've got some exciting PMI data that's going to be dropping over the next few hours. That is going to be really worth paying attention to because we're going to talk about the ECB and whether or not it can impact its decision around September. Jackson Hole is about to start. We'll be focusing on that as well. We've got the politics with the DNC. There's a lot going on this morning. We're obviously building up to the crescendo of the BOJ and the Jay Powell speech tomorrow. But today things certainly get into gear in a much more meaningful way than they have already this week. Yesterday was as dull as dishwater. Today, I'm quite excited. The PMI data, I think, is going to be interesting, Kriti.
Finally.
It's taken a while to get there, but finally, I think this week is going to burst into life. The PMI data, what is it going to tell us about what September looks like from the ECB's point of view? We're going to get accounts later on as well. The July data was really weak and I think caught a lot of people on the hop and maybe pointed to the fact that maybe the recovery that we've been anticipating in Europe, in the Eurozone, was not materializing the way that we anticipated. Does today's data confirm that?
Well, I think it also maybe broke some holes in that strength that we were just talking about in the euro. The fact that we're still at 111, when we're talking about these concerns about more rate cuts down the road from the ECB, the fact that we're talking about continued weakness in France and in Germany, but then strength on the periphery, except the ECB is expected to cater, obviously, to the core more so than the periphery. The fact that we're still talking about that and looking at a 111 on euro-dollar speaks to this fact that the Fed is really in control here versus that. I think we might get more action on the European PMIs. I think that's where this sets up this market to actually act.
Does the June cut have an impact on this set of data? I don't know. Maybe it's too early. Monetary policy is meant to work with a lag, but there is a sentiment effect. I do wonder whether that dollar story, which I also find fascinating, why is euro-dollar where it is right now, and is it going to reverse? I think it's partly the unwind of the Trump trade. Maybe that's a factor into what we've seen here. You've obviously seen some of the data around the United States recently, certainly the payroll number pointing us to a more dovish Fed. We obviously saw what we saw at the beginning of this month. But has it gone too far, I think, is the question you're really posing.
Well, I think agreed. And I think that's the kind of the ECB story. But then we also have UK PMIs that will believe in the 9 o'clock hour as well in UK time. And that's where the reaction function is a little bit more sensitive when it comes to the BOE, because I think they're perhaps more apt or more able or more historically have reacted more to just one data set, where the ECB and the Federal Reserve waits for a couple more. They say they use that data-dependent phrase far more often.
Well, let's talk about the Fed data that the Fed is looking at, the data that the Fed is looking at. Yesterday, there were some interesting things that happened yesterday. So there's a couple of things that really stick out in my mind. One of which is the fact that we got this big revision, much bigger than many people had anticipated on the downside in terms of the labour market story out of the United States. But I read the minutes last night out of the Fed, and they were super dovish, much more dovish than I anticipated. I think much more dovish than maybe the market anticipated.
Well, the fact they were saying that more people than expected, I mean, I feel like a September rate cut has been telegraphed for some time now. But the fact they actually said that there was a pretty decent amount of participants that voted for a July cut.
Exactly.
That's wild. And I think that, again, fuels this argument of the Fed being late to the game when it comes to cutting. And that's where that revision story really comes in. 818,000. Yeah. That's enormous. I think Anna Wong, our chief U.S. economist out of Bloomberg Economics, points to the fact that revisions are usually 0.1%. So that's kind of the margin of error. This is 0.5%. This is 5 times as large of a revision. Yep.
We're going to get a new payroll number at the beginning of September. I think that's going to be hugely significant. Could that, plus these minutes, put 50 back on the table for the Fed in September?
It could, but I'm still struggling to find the case for that. Does that affect the delay? Does that affect the lag into the economy? Or does that just buy it some time if they do choose to forego November?
We haven't really talked about Jackson Hole in this conversation. I can't believe it. But Jackson Hole is definitely coming up.
Yeah.
It starts today. We've got some great speakers lined up. Obviously, we're kind of building up to what is going to happen tomorrow with the Fed chair speech. But today, we're going to hear from the Bank of Latvia president at Jackson Hole. We're going to get his thoughts on the ECB's rate-cutting cycle. We've got plenty of great guests over the next 24 hours. Atlanta Fed President Raphael Bostic's going to be joining us. The former Cleveland Fed President Loretta Mester is going to be on deck as well, as is ECB Governing Council member Olli Rehn. We're going to talk to many of those significant central bankers that are going to be attending the Jackson Hole conference. And also, we have that interview with the Fed Chair, Jerome Powell. That's Friday. That's 3 p.m. UK time. That is going to be something that we are definitely going to be watching out for. That speech, hugely, hugely significant. Let's talk about the DNC.
Let's talk about the DNC. The DNC just gets more and more exciting as we get closer. Today's, of course, the big day where we hear from Kamala Harris herself. But we heard from Tim Walz, of course, the vice president, officially, formally accepting his VP nomination. Take a listen to what he had to say.
If you're a middle-class family or a family trying to get into the middle class, Kamala Harris is going to cut your taxes. If you're getting squeezed by prescription drug prices, Kamala Harris is going to take on Big Pharma. If you're hoping to buy a home, Kamala Harris is going to help make it more affordable.
So, of course, Tim Walz there, the VP, or the official VP nominee for the Democratic Party, making some comments. I think what was interesting, guys, the fact that we actually kind of got some idea of what the economic policy looks like. And I think it's also significant from the political perspective that, yes, we know Kamala Harris is going big on the economy, making things affordable. We heard that in that soundbite there. Tim Walz also trying to really garner that more conservative vote. I mean, this is someone that hadn't really pushed back on the Second Amendment. Actively in his speech said, I am not pushing it, which is, of course, for our international audience, the amendment that has to do with gun control. It's a very hot button issue in the U.S. right now. This is him trying to get those Republicans on board who are maybe not so sure about
Maybe it's
Trump
not the Republicans. Maybe it's just the people in the middle. Maybe you don't reach too far to the right. Maybe you just reach further into the middle with this. And I think that's the significant thing that is happening here. The two bases are pretty solid. It's that middle ground that this battle is going to be fought over, key swing states. That is where the fight is right now. And it does seem as if the Democrats are very carefully looking at that and trying to figure out how to take that ground and make sure that they can control it. And that's hugely significant. We thought that the Republican convention was pretty slick and was well run, and it certainly looked like that. This is matching it. It feels slick. It feels upbeat. It feels positive. And it feels certainly a lot more... It feels a lot different to maybe what we were anticipating when we were thinking that Biden was going to be accepting the nomination.
Absolutely. And I think just the fact that we are starting to get this kind of trickle out of what the economic policy actually may look like. We're going to, I imagine, a little bit more guidance of that from Kamala Harris tonight as well. But off to a good start. And I should say plenty of celebrities making their case. We have in the political sphere, Barack Obama, Bill Clinton, Oprah Winfrey, Lil Jon also made an appearance.
I think it's stunning, the fact that you think about Bill Clinton up there on the stage. Decades since he accepted the nomination.
Absolutely.
Amazing. Let's talk about the show. Let's tell you what's coming up. We've got some great guests lined up to analyse all the news that we have. Massive enter this week. Brzeski is going to be joining us. We're going to break down the PMI data with him a little bit later on from ING. We've got the IAEA Director General, Rafael Grossi, joining us. He's concerned about the deteriorating situation in Russian-occupied Zaporizhzhia. He's also seriously concerned about what is happening in the Kursk region with the with the invasion of the Ukrainian forces into that space, and the fact that we do have a nuclear plant there that is now potentially within range of the artillery that Ukraine has brought with it. Plus, we're going to be speaking to the Bavarian Nordic CEO, Paul Chaplin. We're going to be talking about what is happening with the Mpox outbreak. We'll get his take on what is happening there. They've just released numbers. They do have the capacity to deliver significantly higher numbers of doses to Africa. But how does that process unfold? We're going to get an idea from Paul a little bit later on, Kriti.
Yeah, so some great guests ahead that we're going to keep an eye on. We've also got some pretty important kind of trading points throughout the day. We talked a little bit about those PMIs. At 10 a.m. UK time, we also get those Euro area negotiated wages. That's the indicator that the ECB watches. A lot of economists putting out notes right after that, really talking about what that labor market looks like. It's not just about new jobs. It's about how much they're getting paid in line of inflation. or perhaps not. Also, the earnings story continues over in the States. We're talking about the strong consumer. Got plenty out of the docket over the last couple of days. Macy's, Target, Lowe's, Home Depot, and Walmart, I know, has got some guys' favorite topic. We're also going to get Peloton earnings. I don't know if you're a Peloton kind of guy, but it's a luxury story. It's a consumer story. It's an exciting one in the tech space. That one reporting before the bell over in the States. But then back to the UK, the eco story, 1:30 p.m. UK time. U.S. jobless claims plus U.S. PMIs at 2:45 p.m. UK time. And then kind of the big stuff that we already discussed, Jackson Hole and Kamala Harris's DNC speech. So plenty going on an otherwise fairly quiet August Thursday.
Do you think it's so? Kriti and I sat down, and I'm like, it's quiet. It feels quiet. This feels like kind of the mid-August. Today actually does feel a little bit different. Today, this week so far has felt like it's been a build-up to today and tomorrow. Yeah. But we're in it now.
Well, I think what's also interesting is that we're going to start to see maybe the markets react a little bit more. And that's why it's getting exciting, because yesterday we talked a little bit about that revisions data, the dovish minutes as well. You saw a 4 basis point move in the 10-year, which, by the way, in context of all the news that we got, isn't that much, I would have thought. So I wonder how much of that actually is setting something up for a bigger reaction off Powell.
You get a big reaction off Powell. Potentially you're looking forward, obviously, to what is going to happen with the September payroll number as well. Yeah. Feels like there's kind of... It feels like the phony war is now over. We're into the kind of... Are we going to get a September cut? How big is it going to be? Yeah. We've oscillated, but now we're going to start to get maybe some confirmation from the Fed as to what it is thinking right now. Yeah. Powell's going to lay that out for us. I don't know in what level of detail, but he's going to talk about data dependency, and then we're going to get the data. And I think that both of those kind of two events, which are coming up shortly, I think will keep the market on tenterhooks.
Well, I think the other thing we have to keep an eye on is we're still talking about monetary. When do people start pricing in the Kamala trade? We talked about the Trump trade. Yep. When does that start to hit?
What is that?
The Kamala trade, I don't know. Economists and market participants seem to think that it could lead to, they're trying to cut costs in a lot of different ways. It could lead to stagflation. It could cut growth. I don't know how you price that in necessarily outside of sector stories and pharma and groceries, et cetera. But
stagflation is bad for equities and terrible for bonds.
Sure. But do you price that in? I don't know.
I don't know. Well, we'll get closer to November. I suspect we'll probably find out. What else do you need to know this morning? Let's run you through some of the other headlines we're watching. Italian divers have retrieved 5 bodies from a luxury yacht that sank in a storm off Sicily. The British tech entrepreneur Mike Lynch, Morgan Stanley International Chairman Jonathan Bloomer are amongst those feared dead after Monday's tragedy. PwC's China unit is reportedly bracing for a 6-month business ban from Beijing. According to the Financial Times, it could start as early as September as part of punishment over the company's audit of the property giant Evergrande. And Deutsche Bank said it expects a €430 million boost to its third-quarter results. This after the German lender said it is making, quote, significant progress in talks over claims in the Postbank case. The suit claims that has been brought by a number of individuals that Deutsche Bank underpaid for its acquisition of Postbank in the late 2000s. We've got more on this. Yes,
we do. We have headlines crossing the wire at the moment. The Deutsche Bank is going to be reviewing their capital payouts on that Postbank settlement. That coming from a spokesperson commenting in an email statement. We'll see if that actually affects the share price at the opening trade.
So the argument here was that they underpaid. They should have paid what the price was when they first started acquiring some of the shares. This has been a very long and ongoing issue for Deutsche Bank. If they can put it to bed, if they can get some certainty here, then I think shareholders will be delighted. So what have we got coming up? Let's talk about what's going on in the rest of the show. It is a busy morning.
It is a busy morning. Coming up on the program, we're going to continue to be talking about Germany. Berlin vows to maintain support for Ukraine as long as necessary. We're first going to go to the latest out of Berlin. Plus, European PMIs, as we discussed, dominating the landscape on the continent this morning. We're going to break the German and French prints right after the European Open. But up next, attention shifting to Jackson Hole ahead of Jay Powell's speech tomorrow. What's priced in? What's not? Join us in the conversation. If you have any questions for our guests, please send them to us. IB plus BBTV Go is the function on the terminal. Stick with us. This is Bloomberg.
We've had a very strong rally after a pretty violent correction. And I think that's a reflection of an adjustment back to less concerns about recession and more hopes for interest rate declines. We don't expect very strong returns because valuations are relatively high. But I think the default position is that when you're getting interest rates coming down, in the absence of recession, and that would be our central view, equities generally make pretty decent gains.
Peter Oppenheimer, Chief Global Equity Strategist at Goldman Sachs, speaking to Kriti and me yesterday, talking about what is the outlook for equity markets, what the rate outlook looks like, how those two are tied together. Joining us now, Mohit Kumar, Chief European Economist at Jefferies. Great to see you.
Thank you.
I wanted to start this conversation talking about kind of what's happening here in Europe, but during the break, basically, you sat down and went, Europe's really boring. We should talk about what's happening in the States. So let's talk about what's happening. Let's talk about what's happening in the States, first of all. Jackson Hole's coming up.
Yep.
We saw some pretty big revisions yesterday in terms of the employment story. You had some super dovish minutes. Like, I read them last night, and I was actually quite surprised at how dovish they were.
I agree.
You're the chief European economist, so let's start and talk about the States. What do you make of what is going on right now? 25 bips in September, is that looking like a done deal? It feels like it after the data we saw yesterday and the minutes we saw yesterday.
Now, 25 basis points in September is a done deal. But even though the minutes were dovish, there was nothing to suggest a 50 basis points in September. If you look at the market pricing, we're pricing in 105 basis points of cuts for this year. Does not make sense. So my base case is we get 25 in September, 25 in December, maybe another 25 in November. But that's the maximum I see from the Fed.
That doesn't sound recessionary.
No, it's not recessionary. So you look at unemployment rate, and I know the unemployment number spooked the market, but 4.3% unemployment, plotted on a 20-year chart, it actually looks good. It does not look recessionary. Recessionary is unemployment rate at 6%, 7%. I do not think we're in a hard landing camp.
So what's neutral right now? What are they shooting for?
Well, neutral is debatable.
In your view?
Fed estimates suggest it's somewhere around 3%. My base case is slightly higher. Now, whether it's 350, 375, debatable, difficult to say. But I would say around 350, 375. And this is, I think, what the Fed is shooting for.
So this is, at the end of the day, a normalization story.
Exactly.
And what is if it is normalization, what's the roadmap here? Are we going back to pre-COVID times? Is that the comparison?
Absolutely not. So my roadmap is, let's say neutral is 350, 375. We end slightly above neutral. My base case is we start in September, do gradual cuts, 25 basis points, and we end up close to 4%. Maybe we go to 375. But that's the bottom of the rate cutting cycle that I see.
If the Fed cut 50, would inflation tick up?
I think there is another force in play, which is fiscal. And I'm more worried about the fiscal side.
She's very excited about this.
I was about to say, I was about to start cheering.
But I do think it's the fiscal part which is more concern for me on the inflation side rather than...
Right. But if the Fed cut 50, would it be inflationary?
Not obvious. Okay. 25 versus 50...
So what's the risk in cutting 50?
The risk is giving a wrong signal to the market, making a policy error. So we cut 50, and 6 months down the line, inflation starts to pick up, or at least doesn't come down. It's seen as a policy error.
But isn't there a case for 50 in that if the revisions are more aggressive than expected, 818,000, if the dovish Fed minutes suggest that more people were actually in favor of a July cut than formerly expected, wouldn't 50 kind of be reassurance to the market that the Fed is catching up and they're not late to the game?
I would say it could get a wrong signal to the market, that the Fed thinks there's something wrong. There is a reason for panic. And I don't think the Fed wants to spook the market. So a gradual cut. So let's say we have a case for 50. I don't agree, but let's say we have a case for 50. From a Fed's perspective, it's much better to do a 25, and then if the data is worsening, do another 25 in November. They don't lose anything by waiting. So rather than to spook the market, just have a gradual approach.
Should the ECB cut by 50?
Absolutely not. To me, ECB is 25. So my base case is ECB also cuts 25 in September, another 25 in December. We end the cycle around 275, just above neutral. So it's a gradual path. For Fed, for ECB, for Bank of England, it's a very gradual rate-cutting cycle.
What are the PMIs? Are the PMIs going to be exciting today, or are they just going to... I think I know the answers to this question. Everything's just been going... It's like a zzz in Europe at the moment. Nothing seems to either get us to lurch lower or take a step higher.
I feel like you're jinxing it.
I probably am. That's usually what I do,
It could be exciting because the market is very focused on growth. So in the debate of growth versus inflation, I think growth is now much more important. So that's why I think PMIs could be exciting. But like you said, the variability of market expectations for Europe is just very low. Look at bond yields. We were at the same level a year ago, where we are today. Look at ECB expectations. We go from 1.5 to 2.5 cuts for this year. It's not that exciting.
You could argue that's a good thing because the last year we have been whipsawed by Fed expectations. The US, the market can't read the Fed, but it seems like it's having a better judgment on when it comes to the ECB. Isn't that a good thing? Isn't that a tick in the box for the ECB?
It's a good thing, and it's a good thing from a market perspective, that less variability.
Yeah.
And all the focus is on the Fed because, as you said, the market is just not able to judge what the Fed is going to do. But I would say it's not just the markets. I don't think the Fed is able to judge what the economy is going to do. So it's a good thing from the communication perspective, from the variability perspective. But when I think from a trading perspective, does Europe excite me a lot? I would say US excites more than the euro.
Can we go back to the fiscal? Because that's what I've been obsessing about for the last 2 minutes. But let's talk about it in Europe as well, because in September and October, we were talking about this after the show yesterday, that we're expecting the politics, the deficit conversation to start creeping back up into the European conversation prior to when we get those U.S. election results. So the French story isn't over. The German story isn't over. Spain and Italy are still doing fabulously. And I'm curious when the ECB has to start paying attention to France again, to Germany again. How much of the monetary does have to respond to the fiscal?
So in terms of ECB giving attention, one is we get a tail risk, that lots of fiscal concerns, spreads start widening, not in that camp. I think, yes, spreads can go. So if I look at French spreads, we can go to 80 to 90 basis points, but that's not a concern area for ECB.
Why not, though?
Because still, if you look at the debt to GDP, so what ECB looks at, and this is what IMF looks at, is debt sustainable on a longer-term perspective? So to me, the extreme example is Italy. So Italy, a year ago, we were close to 150% of debt to GDP. If you look at the path for debt dynamics for the next 5 years, you really need 10-year rates at 5.5 for debt to be upward sloping. We're not there. France, far, far away. So the debt sustainability is not a concern. That said, is it a concern for markets that we start talking about fiscal when, one, spreads are really tight right now?
Yeah.
Two, inflation could start picking up? Absolutely. If you look at historically, fiscal has always been a worry around October, November. That's because the budgets need to be finalized around end of the year. And if you look at Italy, we've got the November budget. This is the time I do expect fiscal to become a big story. The other big story from the fiscal side is Europe going to increase defense spending for next year and the next few years? Yeah. And to me, the answer is very likely, which means we have more issuance.
There's no money to do it.
Is that a zero-sum game?
Yeah.
Are they taking from one pot to put into another pot, or is that kind of more money going, new money being generated, new debt potentially being generated to pay for that?
I think potentially new debt. And my base case is, if you look at the EU funding program, it kind of ends in 2025 because that's when the grants are paid.
Yep.
One option is we just extend it for another few years and have a joint issuance program for defense spending. But to me, it has to be new money. And it cannot be individual country because France cannot increase its deficit. Italy cannot increase its deficit. Yeah. That means EU has to do it on a cumulative basis.
And do you think the political turbulence that we're seeing in places like France and I suspect Germany very shortly, we're already seeing it to a certain extent, will make that more difficult? Or do you think that's going to be something that the politicians will simply have to do?
So to me, it's always reactive rather than proactive. Yep. Reactive in the sense, if there is a need for defense spending, and geopolitics is always difficult to predict, but if there is a need, Europe has to do it. They have no choice. Yep. Which means that individual countries can't do it because of France, because of Germany, exactly the things that you mentioned. So you get an EU-wide issuance.
And if Trump gets into the White House, I guess that maybe accelerates that.
That puts the pressure.
Plenty more to digest. Mohit Kumar, we'll have to leave the conversation there. Chief European economist over at Jefferies. We thank you so much. Talking about the monetary, the fiscal, music to my ears on both sides of the Atlantic. We thank you so much. Coming out the program, we talk to the IAEA's Director General next, as the UN agency says it will visit a Russian nuclear plant over safety concerns after Ukraine's incursion. What does that mean? What do the safety precautions look like? That conversation next. Stick with us. This is Bloomberg. 30 minutes away from the start of the opening trade. Seeing futures indicated lower, but not by a major margin. Not much to write home about. You are seeing currencies, however, stick to those kind of strong levels that we saw. To me, that's the excitement. But when it comes to the stock market picture, I think we've got one that we've got our eye on. Deutsche Bank in particular, already gaining 3.1% on trade gate pricing versus the close. This, of course, comes in light of the settlement with that Postbank story. So we're going to keep you apprised of the market moves as we get there. But sticking with the Germany story, controversy there this week as the government's financial support for Ukraine was called into question, moving the markets on the back of those reports. Since then, several politicians trying to reassure that Germany will indeed continue supporting Kyiv, including the chancellor himself. Oliver Crook has been monitoring the story for us out of Berlin. He joins us now this morning. Ollie, how real is the doubt that Germany will stand by Ukraine?
Yeah, I mean, real enough that the Chancellor Scholz on his trip to Moldova had to sort of reassure the world that basically no matter what happens, that Germany will continue to stand with Ukraine. The question is basically a German budget question, a sort of fiscal kind of a domestic situation in Germany where they don't have the money that they originally thought that they had after that court ruling last year. And now the finance ministry is saying basically there's not going to be any new money going to Ukraine. The thing is, despite the fact that there was sort of a lot of outrage around that earlier in the week, there has not been a change in that policy from anybody. They've all said this reassuring things. They said they're going to stand with Ukraine. They've said that, you know, the Russian frozen assets are really the financing vehicle going forward. But no one has said that actually we're going to make space within the German budget going forward to support Ukraine. So next year, the funding for Ukraine drops from $8 billion from this year to $4 billion next year. And by 2027, that's it goes to half a billion euros total. So really, this is a very sort of kind of interesting that you're letting the sort of accounting logic govern what is a really very poor geopolitical signal to both Moscow and obviously potentially a Trump-Vance White House that will just say, basically, if Germany's not supporting, why should the U.S.?
Let's talk about German creativity. How do they get around this?
That's my favorite sort of topic. I mean, one of the couple ways that they can do it is they can do an emergency fund, which they've done in the past in terms of getting sort of new money that goes around the budget. That's one of the ways that they can do it. The other way is obviously some EU-level funding. There's the joint debt conversation. That guy, as you know, has not gone away. But maybe another way they could do it is supporting using some of the weapons in Russia, right, which has been a debate what the Ukrainians have called for a lot. We heard from Joseph Borrell out just overnight saying basically this on X, saying that lifting restrictions on the use of capabilities versus the Russian military involved in aggression against Ukraine in accordance with international law would have several important effects. It would strengthen the Ukrainian self-defense by ending Russia's sanctuary of its attacks. It will save lives. It will help advance peace efforts. The problem is that within Germany is you've had this sort of dynamic a lot of the sort of time with Ukraine where you sort of have a real reticence to take any kind of risk. Of course, escalation is a major concern, but the Germans were very sort of slow to act and eventually got there over and over the line. Yeah. And the other issue you have in Germany is political dysfunction, a coalition that really just doesn't agree very much. The FDP, the finance ministry, doing very poorly in the polls, so they want to seem tough on the budget, and that's what they're going to do.
Ollie, thanks for the update. Really appreciate it. The German political angle on what is happening in Ukraine and in Russia now. Bloomberg's Ollie Crook joining us out of Berlin, mentioning the fact that Borrell, the EU Borrell, talking about the fact that Europe needs to unlock long-range strikes against Russia, which kind of takes us to our next subject, a very much related subject. The head of the UN's nuclear watchdog is planning to visit an atomic power station in Kursk. This is in southwest Russia. Look at the map. This is where we are in terms of the geography. Top left-hand corner is the plant we're talking about. Rafael Grossi telling the Financial Times overnight he is taking the risk of what is happening there very, very seriously, quote. This comes days after the IAEA warned that safety at the Russian-occupied Zaporizhzhia nuclear plant, which is in the bottom kind of portion of that map, is deteriorating. We can speak to him now. Rafael Grossi joining us now, the Director General of the International Atomic Energy Agency, joining us on the programme. Good morning to you, sir. Let's talk about what is happening in Kursk right now. You have, we understand, accepted an invitation from the Russian authorities. When are you planning to visit the site?
Well, good morning first. Yes, indeed, as you were saying in the introduction, we have a very concerning situation there, on top of what we have been working on and what we have been seeing in Zaporizhzhia. Now we have a second nuclear power plant, which is, if not on the front line, like Zaporizhzhia, very close to another point of contact or front line in the region of Kursk, as you rightly said. Since this advance of Ukrainian troops started and in the proximity of a nuclear power plant, the Russian authorities have been giving us some information, and my reaction to that was, as always, that the only way in which the IAEA can validate things, confirm things, is when we have an opportunity to independently assess what is happening. This is valid for Zaporizhia, this is valid for nuclear proliferation in Iran, or whatever the IEA is. Hence, this dialogue led to an invitation to come, and we are working on the details. As you can imagine, visiting a combat zone is not like, a normal business trip. So we are working on a number of logistical and security details that are necessary in order to make this possible within the next few days.
What do you expect to accomplish on this trip? What do you expect to find on this trip? Can you give me a sense of what this plant looks like, how it's laid out, how protected it is? I understand there isn't a concrete dome over the reactor, etc.
This is a very peculiar facility. You have there 6 nuclear reactors. You have 2 which are being decommissioned, so they are not working and they are being dismantled, if I can put it like that. There are 2 which are operating. First, important key information. This is not like Zaporizhia, where you have the plant basically in what we call cold shutdown. So these are hot nuclear reactors, which means that in case something, God forbid, happened, there would be a very serious situation. And then we have two other plants which are being constructed. So you have the whole, I would say, spectrum of possibilities regarding a nuclear power plant. And the other important element that I want to signal is that the operating units are of a type called RBMK in the Russian terminology, which are similar to the nuclear power plants that you may remember from Chernobyl, which means that they do not have a protecting dome around them, so just a normal roof, which means that the reactor's core is pretty exposed. And when you add up this fact to the issue that you have advancing troops, objectively speaking, within artillery range, then this, of course, is a source of enormous concern to me and for the agency. So when you ask me what I want to accomplish, first of all, is to check things on the ground, to see what the situation is. We will be having, of course, conversations with not only the nuclear experts. I suppose there will be security or military people who will be able to give me their own assessment. We have to make our own assessment of the emergency preparedness and response preparations that this facility has. So it's an enormous task ahead of us, not an easy one, but this is exactly what we need to do, go where problem is.
Well, Rafael, let's take that piece by piece and start with the safety concerns outside of the military risk itself. What does that emergency preparedness you just referred to actually look like? If we're talking about this kind of exposure, what kind of safety measures might you need to be putting into place?
Well, we need to, of course, this is an evolving situation, right? So we do not have, and this is an active combat zone. Let me remind the audience again about this. So it's a situation that is changing by the hour. And this, of course, means what I mean by this is the distance of the capabilities that are being deployed there, which means that we need to know what is the situation, for example, regarding the external power supply. The external power supply is essential to ensure the cooling function of I repeat, operating nuclear power plant, which requires constant influx of electricity in order to ensure the cooling function, lest you have a meltdown of the reactors. We need to understand in the current circumstances how is the supply chain working. A nuclear power plant, like any other big industrial site, is in constant need of equipment, things that come and go. And as you have seen, and I'm just simply mentioning, open source information that is available. There are some bridges that have been either blown up or destroyed. So I need to understand exactly well how isolated or otherwise this nuclear power plant is at the moment. So the only way to do that is to go there, to have a conversation with the local government and with the Russian federal government.
So, Rafael, that's the safety concerns, of course, that you had mentioned. Let's kind of dive into that combat zone perspective that you were just talking about. There's been criticism that even though the IAEA, has been monitoring both Zaporizhzhia and Kursk for the past 2 years now, you haven't come out more clearly about who you think is behind the attacks on both nuclear plants, despite both Russia and Ukraine very clearly accusing the other sides. Any comment on that?
Well, yes, we hear that. I think what is important in this case is to understand what the role of the IAEA is and how the IAEA operates. The IAEA is not a commentator, is not a political actor, is not a country, is not a member of any alliance or otherwise. It's an international organization charged with the nuclear non-proliferation, nuclear safety, nuclear security, nuclear energy, nuclear applications, and so on and so forth. So whenever we have a situation, whichever this may be, this is why I make the analogy of, this situation, or it could be a nuclear non-proliferation case in the Middle East. The only way we can pronounce ourselves in a definitive and clear way is when we have elements in our hands. We are also a body of inspectors that undisputably indicate the origin of an event. If I don't have these elements, I can describe the issue. I can even go as far as saying how we think this occurred, but we cannot get into speculations of why or the motivations or the reasons and so on and so forth. For this, you have the U.S. Security Council, you have many other things. This being said, if we had undisputable, irrefutable evidence pointing to a source for an event, we would say it. What I have been saying, I've said it in front of the United Nations Security Council, is that whoever is behind this must stop. An operating nuclear power plant cannot be, should never be a military target. So what we can do for the international community is being there, being a deterrent, and importantly, giving objective information. Otherwise, you are at the mercy of one or the other narrative.
So, Rafael, just to be clear, are you saying you don't know where the attacks are coming from on both Zaporizhzhia and on Kursk?
Well, first of all, we have to make a difference, an important difference here. In the case of Zaporizhzhia, there have been a number of episodes, attacks, and there have been mutual accusations. The Russians accusing the Ukrainians accusing the Russians. We have been diving as deep as possible into the issues, the last of which was, as you may remember, 10 days ago, more or less, when the cooling tower of the Zaporizhzhia one of the cooling towers of the Zaporizhzhia nuclear power plant was on fire. When that happened, we got access to the place just a few hours after the fire had been put down, and we were able to issue a number of technical updates, which give a pretty good amount, I would say, of information about this. So this is number one. I have also explained that in the case of drones, given the trajectory of drones, given the erratic trajectory of drones, unless one can find enough evidence, it would be even irresponsible to say it's A or B. So it's not that we are unaware. We have a number of elements, but again, before an international inspector says something definitive, one has to be absolutely 100% sure. And in the case of Kursk, then the situation is even less clear.
Okay, on the situation in Kursk, have you received any assurances from Kyiv, from the Ukrainian side, that they will not be targeting the site there?
We are working on that.
Okay. What questions? So you have asked the questions, and they have not said.
We are
they
asking,
have not given you a definitive answer.
As you can imagine, Guy, we're asking all sorts of questions. So I have to go, and this is a very delicate
Okay, but the specific
issue,
question. The specific question. Sorry, Director General. The specific question is to the Ukrainian authorities, given the extreme situation and the lack of protection that the site in Kursk has. Are you getting any assurances from the Ukrainian authorities, who have obviously a lot of invested interest here, that they will not target this site?
Yeah. After my visit to Kursk and to Russia, the following week I will be in Kyiv. I will be hopefully talking to President Zelensky.
Rafael Grossi, the Director General of the International Atomic Energy Agency. Sir, thank you very much indeed. We wish you well with your trip. Okay. We are going to get back to the markets in just a few minutes' time. We've got around 13 minutes to go until the start of trading. Coming up, Bavarian Nordic, a significant order coming through for its Mpox vaccines. That's from Europe. We're expecting orders to come through from Africa. We're going to talk to the CEO later on the show. We'll talk about the stock as we count you down to the open. That's next. This is Bloomberg. Kumar,
Cutters.
welcome back. Where have you been?
Hello, how are you doing? I've been having a bit of a personal shocker this week. I was moving house the same day that my wife went into hospital and the same day that my son was starting a new school. So she got out
That's
last
quite a lot going
night.
on.
She's got pneumonia and a partially collapsed lung. So she'll be fine, but just bed rest for a bit. So I was trying to be in multiple places at once, and therefore I decided to give up on work.
Oh, my God. Fair enough.
Terrifying.
How was the first day at school?
It was great. Yeah, he's been actually great. The little guy has been good, and when he was helping on the move, he was my shadow as I was running back and forth between apartments we're moving between. So he's been great. So it's we're on the upside again now, so it's all good.
Right. Yeah.
How old is he?
He is just turned 5.
Wow.
Lots of energy, I would imagine.
Indeed. Yeah, it's a great age.
I wonder where he gets that from.
My God, boys are just
No
nuclear
idea.
powered. It's unbelievable. I don't know. They have 2 settings, basically. Ferociously fast forward and then off. And off involves kind of being grumpy.
Sounds about right.
Jamie's had rugby camp all week. He didn't go yesterday because... did he go yesterday? He went partially yesterday because he had a sore ankle. But just battered. But if you don't do that, then he's horrible because he's bored and needs to expend some energy. But then he comes back and he's really tired and then is horrible because he's grumpy. There is no middle ground.
It's wonderful, isn't it?
Just shovel food in.
30 seconds.
Mm-hmm.
Cheers. Great.
We're about 10 minutes away from the opening trade. Seeing slight red on the screen, futures kind of flat. We'll see if there's more action at the open. Let's dive right into the key topics here, which is what do we make out of what we got out of the Federal Reserve yesterday? I want to bring in our Markets Live executive editor, Mark Cudmore, to talk about this. Mark, got some pretty big revisions, got some pretty dovish minutes, and yet the Treasury market only moved by 4 basis points. What do we do?
Yeah, absolutely. That's because I think the general message was dovishness. Obviously, the revisions were large, as you say, and those minutes were definitely dovish. They were showing that the reaction function is of a Fed that wants to cut 50 basis points if it gets the chance. That said, the economic data is just fine. So even though the reaction function is dovish, the fact is the economy is doing absolutely okay for now. Sure, there are revisions lower in the jobs data, but the trend is still an economy that is consistently adding a lot of jobs. And therefore, we are already pricing an exorbitant amount of cuts over the last month or so. So ever since the panic in mid-July, sure, we've pared back some of those rate cut bets, but we've still got too many cuts priced into the curve. We've got more than 6 priced in by next March. The only way that's possible, and it is possible, but the only way that's possible is if we suddenly get a crisis, if we suddenly get severe recession, because inflation is not going to get to a world that mandates that. So therefore, the natural trajectory of rates, of yields, is to go higher over the coming months, but it's going to be difficult to play because of that dovish reaction function. It means the market is overreacting to dovish news, even though the general trend will be yields to go higher.
Mark, the PMI data out of Europe going to tell us that the European economy is okay today.
It's going to probably tell us it's okay. It's not great. Look, the European economy has been the kind of disappointing story for most of the past 10 years, probably, or longer. I'm not going to be, I don't think we're going to suddenly get excited by the European story, but I think there's too much negativity priced into global growth for a global growth story that's doing fine. It's not doing brilliantly. We've got a world which is a little bit more nuanced. It's mixed. It's in the same way that we've got an EM world that is not just one bracket of EM. We've got strong performers, weak performers. In the rest of the world, we've got, India is booming. We've got Japan that is stagnant, but overall Asia's doing fine. It's the same in the global story. So France has some economies that are doing very well, some that are a bit disappointing, like Germany, which is important, but the overall story is one that is muddling through just absolutely okay.
Mark, a quick talk on EM here. It feels like it's getting a little bit of a revamp, but then you see some really great stories actually about the Mexican peso taking a little bit of a beating. Walk us through the EM story.
Yeah, that's actually probably a great one of where the divergence has gone further. We're seeing Brazilian stocks surge to a record. That's been a real kind of boom story this year. And meanwhile, on the flip side, in another part of LATAM, we're seeing Mexican peso, traders just getting burned by trying to buy the dip. It's getting cleaned out again and again. Supposedly, we've moved beyond the carry trade clean out, and yet Mexican peso is getting hurt really, really badly. And I think this is a story that, it's not just trading EM as one asset class, but there are enough good stories out there. I think there are many in Asia. I think the Kospi can still benefit from the overall kind of tech story. It is cheap. I think Brazil still has upside even though it's at records. I think Hong Kong is still discounted. There are many good stories in EM, but it's not just one narrative.
Mark, great stuff. Thank you very much indeed. Mark and the rest of the team, you can find their thoughts MLIV Go on your Bloomberg. Let's talk about some of the single stocks we're watching into the open. Joe Easton's back with the details.
Morning, guys. So Deutsche Bank getting expected earnings increase today. This is amid progress on their negotiations with investors in Postbank, the company that they bought around a decade ago, and they have had a disagreement on the price that they paid for the business. Now, they are saying that they could see a benefit of around 430 million euros. Just a few months ago, they said that they could be looking to pay out more than $1 billion. We've already had the company on the wires saying that they will review their capital position and potential returns, something predicted by analysts as well. Then we're also looking at Bavarian Nordic, the stock of the hour, that is up around 30% this month. The company saying that it will reach the top end of its full-year guidance amid a contract for around 440 doses of the smallpox vaccine. Now, they haven't said the country, but that is a big boost for them, around $700 million. Then finally, JD Sports reporting an increase in some of their US sales, which will be a bit of a relief for that company. They had a profit warning on the US a couple of weeks ago. Keep an eye on JD in London today.
All right, Joe Easton, thank you so much. The opening trade's up next. This is Bloomberg.
Thursday, the 22nd, a couple of minutes to go until the start of equity trading here in Europe. You know, I've been telling you that this is the day that this week really gets into gear. Well, somebody, I think, forgot to tell European equity futures, because, to be honest, we are drifting sideways. And the reason for that probably is down in part to what we're seeing on this chart here. European equities going out pretty much where US equities left off at the end of the day. That doesn't give us a particularly good steer on how the session is going to start here. It's very neutral. So let's take a look at the futures, give you an idea of what they do paint a picture of here in Europe this morning. This is what we've got. And as you can see, Euro Stoxx 50 flat, FTSE 100 futures flat, S&P futures flat. We're going into quite a lot of key data. We're going into Jackson Hole. We've got a lot going on over the next few days. This morning, at least, maybe a market that sees itself sitting on its hands for a little while longer, Kriti.
I just think you've jinxed it. I think you completely jinxed it. It's always your fault. But I think some of the action may come underneath the hood. When you look at specifically at some of those individual stocks, Deutsche Bank, of course, front and center after seeing that 430 million euro gain on that Postbank settlement. So that's going to be one stock that we watch, especially when it comes to the DAX. JD Sports is another where we're getting some of those numbers out as well. It looks like some of those growth, some of those market share gains may be positively received by the market. And lastly, Guy, we've got the CEO coming up on the program, Bavarian Nordic, of course, in focus. Their second quarter revenue beating estimates, their vaccine plan aiming to kind of avoid that COVID debacle in Africa, new orders coming out of Europe as well. So we're going to see what that looks like in terms of the open, in terms of the read-through into other Danish pharma, and of course the lead up to the CEO joining us on the program later.
Looking forward to that, very much looking forward to that in the second half of this show. Let's get the second half of that show underway. We are counting you down to the opening trade. We're not expecting fireworks first thing this morning, but the next few days, there's a lot to digest over the next kind of couple of sessions. Here we go. We are pretty much where we were exactly yesterday. I chuckle because yesterday the FTSE 100 couldn't make up its minds in the first few minutes whether or not it's going to be positive or negative. Feels like it's just about positive. We are struggling to find some direction here. Stock 600 again, kind of just sitting on its hands, waiting to see what's going to happen. Individual stocks, as Kriti says, I think probably where the action is going to be this morning. Keep an eye on Deutsche Bank this morning. It's expected to be good. We'll talk about what's happening with some of the pharma stocks a little bit later on. The IBEX mildly negative, the CAC mildly positive, the FTSE 100 mildly positive. The Stock 600 is up a whopping 0.6%, Kriti, less than 1/10 of 1%.
Yeah, exciting stuff, clearly. But I think to your point, the action is underneath the hood. I'm going to go from a sector basis first because we are getting some headlines on the individuals. But just while we're getting that initial prints out of Deutsche, we'll probably take a few minutes for that to show up on the exchanges. From a sector perspective, it looks like commodities are in the back seat. So you are seeing the likes of Shell, Total, Rio, BP, basically your biggest index contributors to the downside. And like I said, the DAX is going to take a couple minutes to open up as well. You on the UK side, though, you do have some of the biotech leading the charge here. From an index perspective, AstraZeneca seems to be the big index contribution to the upside, higher by about 1% in the opening trades, alongside Unilever. But it does kind of feel like a little bit of an autopilot trade this morning, Guy. We are, however, getting, speaking of that biotech space and the pharma space, Bavarian Nordic shares in open auction extension over in Copenhagen. So we're not getting early pricing there, but we're going to keep an eye on what that actually looks like.
We're going to be talking to the CEO a little bit later. My eyes are glued to the DAX. I wanted to see that first print coming through on Deutsche Bank. At the moment, we don't have it. As soon as we get that, we'll get the German market to be open. But elsewhere, I think broadly at index level, we're waiting. At a single stock level, I think there's a few things going on, a little bit of rotation going on below the surface. But in terms of the individual movers, we're waiting to see Deutsche Bank come through. I think it has
still waiting.
I got excited there for a moment. It
Can
nearly
you just
opened.
Stop jinxing this market, please.
Yeah, I'm terribly sorry. Can we please get on with this? Can we please price Deutsche Bank so that we can get this market open?
We're going to bring it
fantastic.
to you. We're going to bring it to them. In the meantime, we might as well just bring in our guest here because it feels like that's where the conversation needs to go. But we're really talking a lot about whether or not you invest in this market, whether or not you invest in the U.S. as kind of a dive in post valuations, or whether you dive into Europe as the catch-up trade as a play on the States.
Yep. Well, let's catch up with one of the guests we talked to yesterday. Maria Manusci, M&G Investments Fund Manager, joined Bloomberg yesterday. She had a pretty positive view on the European side of the fence.
Europe continued to be very attractive from a valuation standpoint compared to other equity markets. So in a medium to longer term sense, I think there is value there. There are companies that are very global in nature and that have exposure to very interesting sectors that could also do well on a cutting rate type of environment. So there is opportunity there for the medium to long term, especially in an environment of soft landing where you can continue to have this grinding growth on the background.
Gemrmany joining the Pulse yesterday. While we've been tap dancing, Deutsche has opened. Deutsche is up by 2.74%, so we're getting a positive print coming through there. It is up quite strongly on the back of the legal story. Bavarian Nordic, we're going to be talking as well a little bit to that company later on and figuring out what is happening there. But Deutsche is up. So let's turn our attention to this morning's guest in this hour, Helen Jewell, EMEA CIO for Fundamental Equities at BlackRock, joining us now. Great to see you.
Always great to be here, Guy.
What do you make of these markets right now? August has been fairly choppy. We're kind of waiting for some more guidance. Where are we in terms of whether or not we want to choose the United States or Europe? Where are we in terms of whether or not we want to choose equities over bonds?
Yeah, I mean, choppy is one good word for it. It was a very interesting start to the month. But I think what's really important is that the markets are, firstly, back to the levels they were before that. And secondly, a very interesting thing which is going on under the hood is if you look at actually the cyclicals versus the defensives in Europe, then the defensives have outperformed through this month. And I think that's what the market is really saying. The market had almost priced for absolute perfect soft landing, a perfect soft landing. And, of course, what you saw in the US is just a reminder that soft landings are very difficult to navigate, and there is a wide range of what soft landing can really mean. Concerns on the recessionary side perhaps starting to come through. And that means the market has shifted a little bit more defensively than it was before. And, of course, tomorrow is going to be a big and important day, really the indication of what's to come in September and whether we're looking at 25 or 50 bips, and some reassurance that there is some kind of plan for how the US in particular is going to navigate some mixed data that we're seeing coming through.
What this month has told me is that the market is clearly scared about a recession. It's also told me, having spoken to an awful lot of CEOs over the last few days, that they're not. Why the discrepancy?
Well, it depends on what you mean by that word recession. So you can have a look at lots of different phrases for what is a technical recession. Some are all kind of coming across at the moment. But actually for CEOs and for corporates, what really matters to them is anything that is so deep and bad that it really does impact the ability of companies, the ability of individuals to spend. And that's something, again, that we've seen come through. It's actually a decent earnings season. Not a phenomenal earnings season, but a decent earnings season. It hasn't been in any way bad for companies. And I think that's the reassurance you're seeing from a corporate perspective, is that even if the indicators say that maybe you're more on the recessionary side of that soft landing, then they're not concerned because they see the spending both from a corporate level and CapEx and from a consumer level still coming through. And I think that's why you see maybe a discrepancy. And again, I always say it's the key thing you have to focus on, the earnings of these companies, which continue to be decent.
Continue to be decent, but if we go back to that consumer story, specifically in Europe, it feels like the best translation of that in the market shows up in bank stocks, and specifically when it comes to the periphery. Guy and I like to obsess. Him about Italy, me about Spain, together. But together it really shows up, it feels like, in the likes of Unicredit, BBVA, Santander, et cetera, specifically on the loan growth story. But then we're talking about weakness on a macro level in terms of PMIs. What wins out?
So I think for the banks, it's very important to be selective. I mean, the other one I'd throw in there is Irish banks as well, very interesting. So what is consistent about the banks? And the banks have had a fantastic year, and it's an area that we still really like selectively. So you have loan growth. You have deposit growth. You have a strength in deposit betas as well. And I think people often obsess with the banks about rate cuts being bad for banks, but actually they went from negative to positive. 25 bips, they're very well structured, the banks now, and they're returning capital. Again, something I know that you love talking about. They are returning capital to shareholders as well. So selectivity in banks, whether you want to call it the periphery or not, really interesting. And also the beta for the banks is lower than historically it has been. You know, betas for banks have normally been very high, and they are still obviously a relatively cyclical name, but they're more defensive than they have historically been. And again, that's what the market likes, these more defensive, but actually in some ways quite steady companies. That's what you've seen because of the nervousness that Guy talked to as well, that's actually the kind of stocks and names that are doing well at the moment.
Well, I think, does that leave them a little bit more vulnerable, though? And I say this in the regards of, you say that maybe that interest rate story won't matter, but when you talk a lot of about these bank stocks and where they're being valued, it kind of feels like that net interest margin tailwind has been played out for a little bit now. And I think we talked about that last quarter as well in terms of the bank sector. But I'm curious then, does that just leave them very, very overexposed to trading volatility or loan growth or whatever?
No, I don't think so. The valuations still don't look hugely out of sync. You know, they're 6-7 times PE versus kind of more historic double digits. So I don't think that they have the exposure, that kind of nervousness. What the market is happy to pay for at the moment is any stocks in any sectors where they do see some consistency in the returns that those companies can provide. And I do think selectively that sector can continue to do so. So, no, I think there are other vulnerabilities on that nervousness side before you have to worry about the banks.
Are stocks going to do better than bonds for the rest of this year?
There's a big question. I mean, I think that it all depends on whether we go for 25 or 50 and where the Fed gets to. The bonds are priced basically relatively, for a relatively largish cut. They're priced for around 50 now. And I think that if tomorrow you end up with a situation where the Fed come out and say, actually, they're not concerned about recession or they're much less concerned than perhaps the market is pricing in, then I think absolutely equities will be the place that you want to be. But I say it every time, don't extrapolate where we got to in the first now 8 months of this year. It's not going to be like that for the next 4 months.
But do equities need 25 basis point cuts to go higher? And if they get 50 basis points, do they go lower?
Yes, I think they actually do. I think a 25 is perfect because what it's saying is everything is in control. We are pricing it. I think a 50 possibly brings back nervousness about recession as well. So 25 is what I would like to see in September, to be honest, Guy.
OK.
Wow, 25 basis points makes that much of a difference.
Not because of the actual bips. I think this is what's important. It is the signalling. Everything right now is about the signals. And tomorrow, I think we have to get a little bit realistic. I don't think that Powell is going to come out and say anything that is going to move the market. I know we've been talking about it a lot. Exactly. I think he's going to be pretty much, we're looking at the data. We continue to be focused on inflation. We continue to be focused on recessionary risks. But they're going to be playing in the middle.
Does that worry the market, though? Does he come, if he comes out and says nothing, does that worry the market?
Is it like a credibility story?
Well, no, it's precisely. Am I behind the curve? Is the Fed behind the curve? If it's not taking our fears seriously, is it behind the curve? Is there a danger that almost the message gets flipped?
No, I don't think so. I mean, I think he's smart enough that he will do it in a very sensible and very constructive way. We can continue to be focused on both sides of those data points. And I actually think tomorrow not much will happen. I think he will come out with a statement that actually just reassures everyone that he's actually on top of what's going on, which of course he is. I think the key thing will be when we actually get that print and what that really looks like. And if it's not priced at that 25, if it's 0, that will be concerning because it will kind of signal perhaps there's worries on inflation that the market isn't. But I think if he comes out with a 25, and we saw yesterday with some of the jobs data. I mean, that, again, is a little bit of a worry that perhaps recession is there more than we think. But I think if he comes out tomorrow, I don't think we should read too much into it or predict much more. I think, actually, the flatlining we've seen this morning in the markets, I think that might continue for a few more weeks. And then maybe in September, things start to really kick off again.
Well, it also feels like signaling for November matters as well for a lot of reasons in the monetary space. But also, of course, we have that election coming up, which brings me nicely to, I think we kind of know what the Trump trade is, sort of, a little bit. What's the Kamala trade?
More of where we are at the moment. I mean, again, I think there's a lot being read into the Trump trade. I actually don't think there's as much in there as people think. I think that he is somebody who wants to continue to invest in the growth of the US. And that means that he wants to make sure that there are trades globally across the world. I don't think it's in his interest to close any borders. So I actually think that everything in the US is much more middle of the line than people think from a political perspective. And this goes back to the point on the Fed. I actually think that what the Fed do and what the Fed signal and any concerns or any signals that suggest that they are concerned about recession, that is a risk. Any signals that they are concerned about inflation, that is a risk. But anything that is more in this middle of the line, where we are at the moment, that means that earnings come through. And then, we have got some data points coming up when it comes to earnings. Some of the big tech names still coming. A lot of focus will still remain on what earnings look like.
All right. Hello, Joel. We'll leave it there. Amia, CIO for fundamental equities over at BlackRock, we thank you so much. So she was talking about the macro. Talk about the mega caps.
OK, let's talk about what we're seeing here in Europe. Europe's core six. Let's focus on what is happening there. These are the stocks that are performing this morning and doing some of the heavy lifting. And as you can see, largely they are higher, but not by much, as Helen was just saying. We are basically flatlining, waiting for a little bit of guidance, maybe waiting for Powell, maybe waiting for the BOJ as well. Let's factor that into our thinking too. Payrolls coming up next week, at the beginning of September, Nvidia next week. There's a lot of things on our radar coming towards us right now. OK, let's talk about some single stocks. Let's focus on what is happening outside of the core six here in Europe. Pharma is where Joe Easton is starting.
So we are starting with Pharma Guy, and actually all three of these stocks listed are over in Copenhagen. So the big one, Bavarian Nordic, up another 10%, raising their guidance today, saying it will potentially hit the top end of their outlook. They've got this massive $700 million order from a country they haven't actually named, but it is, of course, the maker of the Mpox vaccine. So that's where that big order is coming from. I've also brought up Gubra. Now, this is exposed to the obesity drugs. They've got their own rival to Novo Nordisk. Already up around 400% this year, though. Strong numbers, but only gaining another 2%. And down the bottom here, we've got GN Store Nord. Now, this is actually hearing aids, pretty steady area of the market in terms of being quite defensive, but they also do more general electronics for consumers, earpieces, that kind of thing. That is where they're seeing the weakness, the consumer business, the demand business. That is actually coming down at the moment. In terms of JD, we're up 2.7% on that one. They had a profit warning recently, but looks like the US is improving a little bit at the moment. And in insurers going the opposite direction. Now, Swiss Re, better than expected catastrophe claims for them. But Aegon in Amsterdam, they've actually got a bit of an impairment related to restructuring. So that one's hit today, down 5.2%. And CTS Eventim, this is the events company, of course, reminding me of my recent visit to see Taylor Swift at Wembley. But Eventim, they run Hammersmith Apollo, that one gaining actually almost at a record for that stock in terms of the intraday gain, up around 8% at the moment. Then in terms of Deutsche Bank, this one getting a boost from news of this potentially better than expected outcome with the investors in Postbank, potentially saving them around 400 million euros in that debate over how much they should have paid for the business. So we're getting a boost there. CEO and some other executives are already talking about potentially some better than expected capital returns. That's what analysts are predicting as well, so that's a good one there. Then staying in Germany, but looking at HelloFresh, this one just hitting the wire, an activist investor taking a stake in HelloFresh. They're called Active, the investor doing that, actually up 6% almost for that one. So that's a big gainer today. So HelloFresh adding to the gains for Deutsche Bank, CTS Eventim, lots of movers on the screen today for you, Guy.
All right, Joe, I'll pick it up there. Thank you so much. Of course, we got to cut down the Taylor Swift stock because we are getting some French PMI numbers crossing the wire at the moment. The services number coming in pretty hot, rising to 55. The forecast was just 50.3, but the manufacturing, surprise, surprise, is where we're seeing the weakness. 42.1 is the rating. The estimate there, 44.5. Right off the bat of that, you're actually seeing a jump. Euro-dollar strength, 111.56. Also seeing a bump in cable off the back of it, 130.97.
Is that the Olympics? Is that you? Is that...
It's definitely me. My paycheck went straight to France.
I wonder whether there's an Olympic effect in that. The services number looks very strong, certainly versus expectations. The survey was for 50.3 on the services line. It's jumped from 50.1 last time round to 55.
Yeah.
The Olympics feels like it could be maybe one reason for that. It's August. I imagine there's quite a lot of volatility around the August number, particularly with services, given tourism generally. But that looks like a big beat on the upside. I wonder whether that's a sustainable number. It looks out of kilter with everything else.
Yeah.
And the manufacturing line looks very bleak. But it does take the composite number to 52.7, which makes me wonder that actually the Eurozone number in aggregate, we've been concerned about whether that's going to dip below the 50, maybe stays above that line.
Yeah, it very well could. And when you just look at the numbers kind of underneath the hood here, and it could very much be the business effect or the Olympics effect, to your point, because if you look at new business, it looks like the rise is to 51.6. The estimate was 48.3 in July, so this marks the second month of expansion. But if you look at that by comparison to new orders in the manufacturing sector, falls, 37.1 versus 39.6. So again, it speaks to this idea that maybe it is that tourism bid that you are starting to see. Highest reading since May of 2022.
Yeah, that's if you click into the chart, you can do it on your Bloomberg terminal. You can see what's happening with the data. That is in terms of where that takes us back to kind of the highs we saw in 2022, nearly at the highs that we saw in 2022, and there's been quite a sort of sharp dip since then below 50. We've been climbing out of that 50, i.e. the contraction territory, since then. But this looks like a sharp acceleration to the upside, which it feels anomalous to me.
Could this be a problem? Is this a problem for the ECB if we continue to see this trend?
Maybe, but the ECB basically wants to, again, kind of... The ECB has got an inflation problem, which it's trying to manage. It's got a growth acceleration story which hasn't materialised in the same way. This will confirm maybe more on the growth side and maybe deliver a little bit more on that front. Does this... I would be surprised if the ECB doesn't look through the 55 line.
Yeah, but a growth story on a kind of manufacturing makes up a bigger chunk of the economy. So that the weakness
services is a big chunk of the French economy. It's not like Germany. It's not like so. This is a significant number, but it looks out of kilter with the data
that we've seen
in the past, which is why it feels like a sort of an oddity. I don't know. We'll see what the analysis is. We'll talk to Brzeski about this very, very shortly and get his take on what is happening here.
Well,
let's talk as well about what else is coming up. Deutsche Bank. We need to talk more about this Deutsche Bank story, actually. It looks like it's pairing its initial gains. I think that's probably worth taking kind of on board this morning. But basically, it looks like we're getting closer to reaching agreements with more than 80 plaintiffs. This is about Postbank litigation. This is about the acquisition of Postbank and what Deutsche should have paid for that acquisition. We'll get some details next. We'll get into the details of what is happening here and why we're seeing this upgrade to expectations. We'll discuss that next. This is Bloomberg.
Welcome back to the opening trade. We're at 22 minutes into the European trading session. Seeing green on the screen, not by a massive margin. Euro Stoxx 50 futures higher by 0.2%. Seeing about the same margin across the continent as well. But one of the big movers that we are seeing this morning, and I say movers not in terms of margin of the stock, but in terms of kind of volatility you're already seeing, is in Deutsche Bank. Shares are in the green this morning, pairing that initial gain after saying it expects a 430 million euro boost to its third quarter results after making, quote, significant progress in talks over the majority of claims in Postbank. Let's get more on the story. Bloomberg's EMEA Finance Managing Editor Tom Metcalf joining us around the table. Markets are interpreting this as a surprise. Was it?
Yeah, it certainly caught me on the hop. I think the statement came out last night at about 9:30 p.m., 10:30 p.m. German time. And broadly speaking, it is a surprise because for most of the messaging had been like, these are long-running litigation. We're not expecting any progress. And then, boom, out the gate, Deutsche Bank saying that basically 60% of the claims that it provided a total of 1.3 billion for have effectively been resolved in actually quite favourable conditions for them. So that's why they're able to write back now 430 million. And the question is how much more of a boost they might get from the remaining 40% as and when they resolve them.
So this has been about the price paid for Postbank and whether or not they should have paid the initial price or whether or not they should have paid a price that they originally paid, that they ended up paying, and the spread between those two. So we've seen some resolution. Some of the claimants have settled. But what about the rest of them? What are they sticking with?
Yeah, it's interesting. So the reason partly this was a surprise because last week we had a lawyer for a smaller subset of claimants coming out and saying an offer of 36 euros a share or Postbank share was something like, dead on arrival, just completely unacceptable. And then this statement last night shows that Deutsche Bank has managed to settle with, a majority of these claimants at 31 euros a share.
Some were getting the 60s, weren't they?
Well, we're hoping to, right? I suspect there's a little bit of, hopefulness around that. But it's certainly positive because obviously by settling with what included the largest claimant here, that adds to pressure on the outstanding ones because, there's sort of a bar there. They might get a little bit more, but I think certainly hopes of, as you say, 60 euros seems very fanciful. Though, of course, every case is a little bit individual, right? So it sort of depends on the negotiation between the parties.
Does this affect the buyback story?
Yeah, and in fact, that's probably the most interesting statement out today is Deutsche Bank is saying, look, this will help us review our plan. They've basically said we are going to hit pause on buybacks. Now they're saying, because of this momentum, we're going to restart those talks with regulators. Traditionally, Deutsche Bank very conservative on this front, so I'm not expecting them to come out with, shock and awe type buyback. But that is all very positive, and that's probably why you're seeing those shares up 3%.
How big a chunk of the litigation risk in totality does this resolve when it comes to Deutsche Bank?
So it's about 80 or so plaintiffs representing 60% of the value.
Sure, but are there other
Right. Yeah, no, this is probably the biggest overhang. Look, there's always lots of legal risk. But no, this was the one where there was the most uncertainty. And I think part of the thing, again, coming back to the surprise, this 1.3 billion provision in April, that was also a surprise. So it was all these nasty shocks. And for the first time in a while, this has been a positive development for Deutsche.
Great stuff, Tom. Thank you very much indeed. He doesn't often get surprised, but this surprised him. Bloomberg EMEA Finance Managing Editor Tom Metcalf, thank you very much indeed. We've had the French PMIs. There was some surprise there, an upside surprise certainly when it came to services. We are waiting for the German PMIs to drop very, very shortly. Now, different kinds of economies here. One is services-driven, so that's why the French services PMI print is so important. Manufacturing, obviously, the key factor when it comes to what we're watching out from Germany, Kriti.
We have that. Then we also got the Euro area flash PMI
coming up a little bit
about
later.
9 a.m. And then on top of that, the UK PMIs as well. So kind of a little bit of an influx of what we're going to get. But I'm still waiting for this to show up in the trade because the reaction here was positive euro. We started off the show saying that might be the dislocation, and here we are, still looking at a 111 handle and climbing.
Well, it kind of confirms this idea that maybe Europe is doing a little bit better than anticipated. There has been the last set of data that we got on the PMIs told us the exact opposite story. It told us that actually maybe the growth was stalling, and that was a big concern, and therefore it maybe added in on what we were going to be seeing from the ECB. But that doesn't appear to be the case, certainly with the PMI data coming out of France. Anyway, the German data is going to be breaking very, very shortly. The expectation on the manufacturing front is 43.3, pretty much what we got last time. We will break that data for you next. This is Bloomberg.
This is the opening trade about 30 minutes into today's session. I'm just going to bring you the breaking news here. Getting that Germany data crossing the wire. August services PMI falling to 51.4. The forecast, 52.3. The manufacturing, again, another fall. PMI falling to 42.1. Estimate of 43.3. The euro just whipsawing off of that after that hotter than expected services data out of France and then weakness in Germany.
This feels like a more consistent set of data. This is what we've had. This is what we continue to get. The French number feels a little off base as a result of the Olympics, but that manufacturing number, that's weakness. That's more weakness. That is decline. That is a number that may push the ECB to do more. The services number also declines fairly sharply, I would argue, as well. Now, remember, these are diffusion indexes. They tell us kind of it's a rate of change story. But the composite number at 48.5, maybe, as you say, offsets that French number, brings the kind of the 50 line back in play for the composite Eurozone number. It's going to be interesting to see which side of the 50 we end up on in terms of that story.
Well, I'm just looking at the bond story as well, because you are seeing a far greater reaction, no surprise there, on those French bond yields, down about 7 basis points. Germany, though, down 4 basis points. The UK actually a little bit higher when you look at those 10 years. So some whipsaw action. We still have plenty more data to go, though. We've got Euro area PMIs, 9 a.m. We've got negotiated wages. We got the UK PMIs as well. We are not done with the breaking news.
We certainly are not. Carsten Brzeski joins us now, Global Head of Macro at ING Research. Carsten, in aggregate, we've had a weak German number. We've had a strong French number. It looks like that was Olympics influenced. Walk us through your take so far.
I think Olympics beats football, Guy, in all honesty. Indeed, the services number was mainly driven by the Olympics in France, but Germany did not get any positive impact from hosting the European Football Championships. Overall, this is a grim PMI reading, especially the German one, because we see that the German sentiment has been dropping now again for a couple of months in a row. Optimism has completely disappeared again, and this shows that the ECB will clearly have to rethink how to balance its reaction function. We know that they're mainly still focused on inflation, on wages, but with this further deterioration of the growth outlook for the entire Eurozone, I think the ECB will definitely have to continue cutting rates, and they will have to put more focus on how to restore growth in the Eurozone.
I'm just reading through Chris Williamson's line over at Market, who puts this data together. As for prices, and he's talking about the German line here, as for prices, average charges for goods and services rose at the quickest rate in 6 months. Carsten, does the ECB have a problem with that? You've got a slowdown in terms of the headline numbers that I'm seeing on the screen and we've referenced already, but average charges for goods and services rose at the quickest rate for 6 months. Is that going to make September a difficult choice for the ECB?
Yes, to some extent, because it makes the entire macro surrounding in Europe a bit more stagflationary. And we've seen that these selling price expectations have started to come up again for the entire Eurozone, not only for Germany, already last month. So this is clearly bad news for the ECB. When you also look at, for example, current union demands in Germany, where we will have more upward pressure on wages, not only this year, but I think also next year. This stagflationary environment makes it hard for the ECB. But if growth disappoints so much, I think that the ECB will have a closer eye on growth and the Eurozone economy than they had over the last couple of months, meaning they will continue cutting rates in September.
Can you walk us through that negotiated wages question, though? I mean, just put this into context for us. How much upside are we talking about here?
It's a tricky one because the numbers tell so many stories, because they are blurred by these one-off inflation compensations we had in a couple of European countries over the last year. So we still have a lot of base effects going up and down. So I think that the Eurozone, when we get the ECB Eurozone wage growth later today, we will see that wage growth has come down in the second quarter of this year. But looking at the German numbers we had out 2 days ago, we saw that just the collective wage agreements in the second quarter actually accelerated. And I think this is a number the ECB will be looking much more than only at headline wage growth. So there is still a lot of inflationary pressure in the pipeline, and this will at least make the hawks at the ECB have, maybe already some sleepless nights.
Well, Carsten, let's compare that to what we're seeing over in the States then as well. It feels like for a very long time, this diversion between what the ECB and the Federal Reserve was going to do was almost fueling this euro-dollar trade. I want to ask you about the FX here, but I'm curious, is it a positive sign that the ECB and the Fed seem to be on the same page?
They are on the same page, but not entirely, to be honest. Because I think for the Fed, it is easier, because the starting position for the Fed is easier. Interest rates, the Fed fund rate is higher. So it is easier to start with a couple of rate cuts in order to give some support to the economy. In Europe, the situation is more complicated because we see that inflation is stickier than the ECB had hoped, that also the recovery at the same time is a bit more sluggish than the ECB had wished for. So I think the ECB is once again in a more complicated situation than the Fed, in all honesty. So for the Fed, it's more straightforward. Cut in September, continue cutting. For the ECB, we will have to see whether they will actually be able to switch and give a bit more emphasis on growth, and then they would also continue cutting rates.
Yeah, just come back to that inflation story. This is the German data. This is the German statement on the price front. This is from PMI. August flash data indicated an acceleration in the rate of output charge inflation, so the quickest rate since February. So we are seeing a pickup there in terms of what we're seeing out of Germany. And if I come back to the French data on the growth side of things, Carsten, talking about what is happening with the services line, the one-off nature of this boost is evident in the worsening employment situation, weaker output expectations, and declining backlog of work. Carsten, what does the next French number look like down the road? Do we get is there an equal and opposite reaction in the French data next time round? What do the September numbers look like, do you think?
Well, the September numbers in France should definitely bring us a weakening of the services PMI, because this had been a one-off due to the Olympics. We will clearly see a big drop in the services component. In terms of manufacturing, I have been hoping for a bottoming out of this manufacturing weakness across the Eurozone, but already for a couple of months. It can still happen, because you look, inventories are extremely high, and it doesn't need a lot of new industrial orders coming in either country in Europe to see also PMI and sentiment in manufacturing improve a little bit from the current levels. So we will see a bit, probably a bit of a reshuffle, weaker services, somewhat stronger manufacturing.
If the US economy rolls over, how much worse could the European data look?
Much worse, Guy, and you know this. The US is such an important trading partner for Europe. For Germany, for example, 10% of German exports go to the US. And the US is now really the most important trading partner for Germany. So if the US was to slow down, and whatever it's going to be, a soft landing, a hard landing, Europe is going to feel it. We know a typical reaction in Europe. The typical reaction starts with policymakers saying that we are completely independent in Europe and we will not be hit by anything that's happening in the US. And then we'll realize 3 or 6 months further down the line that everything that is happening in the US economically will also have an implication on European growth, which means it's not so much a story for 2024, but it will be a story for 2025. And if then the Eurozone recovery would not come in 2025, this, I think, should be then the moment in which we will really talk about more aggressive rate cuts by the ECB, because there will be a moment in which the ECB has to say, all right, as long as inflation is somewhere between 2 and 3%, that is fine. Let's focus on restoring growth.
Carsten, I really want to talk about deficits and the doomsday stories that I imagine are going to hit the wire over the next couple of months, starting with France in September. I'm meeting some of those EU budget deadlines. You've got Spain, Italy, October, November. Does the ECB need to pay attention to that? How much of it is an issue? If not pay attention to the deficits, then pay attention to the market reaction off the deficits. How do you interpret that?
It is not a doomsday decision yet, in all honesty. I think it is a test case for the new fiscal rules. Remember, we had this reform of the Stability and Growth Pact, and now we will see whether this actually is going to work. What the new rules mean is that the European Commission, together with the individual states, will have to come up with a so-called adjustment plan. So an adjustment plan over a couple of years that will bring down these deficits, that will make debt more sustainable. And we will now see in every single case, France, Spain, Italy, whether there is enough commitment and also willingness at the country level in order to get these paths done. I think the good thing is we will not get this austerity shock that we had in 2010 and 2012. But of course, these fiscal rules, these European rules, will only survive if they're embraced by all member states. If they don't, we can just simply forget about them and throw them in the dustbin.
But to your point, perhaps not doomsday events, but the market certainly panicked off of that. I mean, those snap elections in France largely was a reaction to the deficit concerns there and the spending story. But I'm curious why the ECB may or may not be paying attention to it. I mean, when we did see that panic, the volatility in the bond market and those spreads that still haven't come back, there was questions of whether or not the ECB would intervene. What does that bar look like for potential intervention in the future?
I think absolute bond yield levels are still far too low in really to be worried. Neither I'm worried, and I also think that these levels are nothing that the ECB is really worried about. If bond yields were really to increase, if these spreads were to widen, and if we were to get back to levels which we saw in 2010 and 2012, then the question for the ECB will be whether they are willing to trigger this TPI program. And the ECB always said, and that is the tricky thing, the ECB said the TPI program will only be triggered if a country complies with all European rules. So a country needs to comply with these fiscal rules in order for the ECB to start buying bonds again. We're clearly not at that point, and I think we're far away from that point yet. Of course, we know, and this is Europe is not alone. Other countries have similar issues. We see increasing government debt levels. We see in government debt ratios, which will mean that it is hard for European countries to do this investment, this additional investment, in order to get growth back and to get the green transition done, and at the same time combine it with solid and sound public finances.
Carsten, great stuff. Always a pleasure. Thank you very much indeed, sir. Carsten Brzeski, Global Head of Macro at ING Research, joining us. As Ollie Crook points out, we began the day pricing in a 60% chance of a ECB cut in September, 25 bips. The market's now pricing in a near 99% chance of that now happening on the back of the data. But I will just... The wrinkle is the inflation story. you need to read what is coming out of the statement this morning on the PMIs from S&P Global. It's really interesting on the inflation front. Let's turn our attention back to the corporate news next. A conversation with the CEO of Bavarian Nordic. His outlook on the production of an Mpox vaccine. We'll get you an update out of Johannesburg as to what is happening with the situation in Africa right now. I say in Africa, this is a broad swathe of southern Africa that is being affected by what is happening here. We'll talk about all of that next. This is Bloomberg.
Very unstable and blurred picture right now in Africa. But what we can expect and must expect actually is more sporadic imported cases to the European continent. So we have to be aware of that. We have to be prepared. The member states, the surveillance systems, the medical facilities have to be prepared. But final sentence to this, it's not the new COVID.
Pamela Rendi-Wagner, Director General of the European Centre for Disease and Prevention Control, speaking about what is happening in southern Central Africa with the Mpox outbreak. Scientists are rushing to the region. They're trying to stop the mushrooming outbreak spreading even further. They're finding a complex mosaic, basically, of infection patterns that are difficult to discern, and they're trying to figure it out. Strains are spreading both through close human contact and by handling of animals. Our chief Africa correspondent, Jennifer Sabajaja, joins us now. What do we know? What is the latest? We're getting more and more we're getting a greater understanding of what is happening, but are we getting the full picture at this point?
You know, Guy, I think officials are still trying to find out. I mean, we just heard there, and we've heard this time and time again, that no, this is not the new COVID, but just in regards to the multiplying, the mutating variants, and also just how aggressive we're seeing this disease spread, some officials and experts are saying it is spreading similar to what we have seen with Ebola and COVID in the past. And potentially, as we did hear there again, we could see some sporadic cases popping up internationally as we are seeing. But on the ground in the DRC, we have seen cases, as you were mentioning, spreading through close contact, in some cases spreading through sexual contact. There was concern about children and the impact that Mpox has on children. At this point in time, what we're finding is children are mainly being infected by the less concerning variant. 80% of cases for children are those of the less concerning variant. And really the concern is this mutated strain, the Clade 1b, and potentially its impact on people with that. And so, you know, the question is really going to be testing and how officials and experts are going to be able to continue and keep up with the testing as we're seeing the strains mutate and really affect people in different ways.
So, Jen, Bavarian Nordic, it's one of the only makers of the approved vaccines. They actually reported earnings this morning, shares skyrocketing, higher by about 11%. Can you walk us through the numbers, through the guidance we're getting from the company itself?
Right. And Kriti, even before that, we've seen Bavarian Nordic shares really climbing through August. We did get some guidance from them on Wednesday just about what their expectation is. They did tell us that there was an undisclosed European country that was able to request some vaccines. That is then going to help them reach the top half of their target. But more broadly, you know, they talked about how they have been working with authorities globally since the last Mpox outbreak. And have tried to figure out ways in which they can be a provider. They said, and I know you'll be speaking with the CEO soon, but they may be able to distribute at least 10 million doses by the end of 2025, maybe 2 million by the end of 2024. And it's important to note that the vaccine doses that they have are mainly focused on adults, and they're looking to focus in more on children.
Jennifer, what are other countries doing? Are we seeing borders being closed? How are other countries reacting in the region?
The interesting thing, Guy, that we've really been hearing, I mean, we heard from the Africa CDC actually earlier this week saying that they don't want to see mistakes from the last pandemic affecting what the response is at this point in time. And in particular, just to your question, the impact on borders. We heard the African CDC chief say this is not a response that needs to constitute closing borders, but potentially changing behaviors. And so that is where they continue to bring it back to understanding more of how this transmission is working and potentially then educating people on changing behaviors and how things need to work on the ground. But at this point in time, we are seeing in Africa almost 19,000 cases in 2024. But we need to remember that Mpox has been around for quite some time. It is just these new strains that are really keeping public health officials on their toes and wanting to address it, especially on the continent and even more so more broadly globally.
Jennifer, thank you very much indeed. Jennifer Sebazaja joining us out of Sandton, out of Johannesburg, talking about what is happening in Central and Southern Africa. We greatly appreciate it. We're going to be talking to the CEO in just a moment. We're just fixing some wrinkles in terms of the technology to make that happen. But I think, Kriti, some of the key things that are happening here are, A, they need to figure out a way of clearing this to be treating children.
Yeah.
I think that's one area. Jen's talking about the fact that actually this is that mainly children are being affected by the less concerning variant, but nevertheless, we need to get the vaccine maybe cleared. And what does Bavarian Nordic do? The emphasis at the moment is on orders coming through, but even if the orders don't come through, do they start ramping production now in anticipation of those orders coming through? And then at least we have the capacity to deliver in size what is required into the region.
I'm curious how much, and there's obviously a concerted effort to not compare this to the COVID pandemic because we're not at those levels yet, but there is a roadmap on how to do this from the pharmaceutical space, from the likes of Pfizer, from AstraZeneca, from Moderna, in terms of, to your point, do you wait for the orders, but also where do the orders come from and where do you prioritize? What regions do you prioritize? Because that was one of the criticisms that came out of Pfizer and AstraZeneca, respectively.
There's also a logistics challenge that works all the way around this as well. What do we learn from COVID in terms of distribution? I think
refrigerators, remember, used to be the thing.
Yeah, exactly. How do we get the distribution to work? Do we need to put, does Bavarian Nordic, does the pharmaceutical industry send people who are good at this stuff, who have learnt the lessons, to maybe make sure the logistics works and works well? Do you give one dose? This was, again, with COVID, some of the kind of... Is it better to give everybody one dose, or do you need to give the kind of the sequence? Do you give one dose? I understand that one dose gives quite a lot of protection, so do you just give one dose in terms of how this works? Let's try and get some answers to this question. Paul Chaplin joins us now. He is the CEO of Bavarian Nordic. Paul, thanks for bearing with us and thanks for the patience. It's an interesting conversation. Look, there's a bunch of questions. We've just run through some of them. The first one I want to ask is, you've indicated you've got a big order coming through from Europe. You still have a lot of capacity to send to Africa. Do you start ramping production for the expected orders to come through now, or do you wait for those orders to come?
Yeah, that's a good question. We have to make decisions very, very soon if we're going to be able to deliver the capacity of the 10 million doses by the end of next year. We really need to make some trade-offs and some key decisions. So that's why we're talking with all the stakeholders and really trying to understand what the real demand is going to be. But most likely we will have to start ramping up production and moving over to our Mpox vaccine very shortly.
So, Paul, that's the production side. Talk to us about the delivery here. How quickly can you speed up the delivery? What does that even look like?
Well, we have doses available right now, and the recent order that we secured through HERA, which is the EU, for 175,000 doses, we're actually discussing right now where to ship those to the DRC as we speak. So hopefully very soon, later this month, doses will start to arrive. For the remaining doses that we have on stock, we really need orders, but we're ready to ship significant doses when we get those orders. And as I said, we have a huge capacity for the remainder of this year, up to 2 million doses. We're just waiting for those discussions with the key stakeholders to see where those doses need to go.
But you don't start a big ramp up without those orders coming through, is the message I'm getting here, Paul. Is that correct?
That's correct. We actually manufacture other life-saving vaccines, so we need orders before we can really ramp.
And you're not switching over. You're not temporarily delivering a hiatus for some of those other vaccines in order to produce some of this vaccine. That's not happening yet.
No. So we have a production line for our Mpox vaccine. We are producing doses for the orders we already have. To ramp up really takes a shift in resources and capabilities. We're looking at doing that. We can do that. That's how we will be able to deliver the 2 million doses. But really, we really need orders before we can move.
Paul, very quickly, talk to us about localizing some of that production, moving some of that manufacturing ability to Africa. Where are we on that?
Yeah, so through the Africa CDC, we're talking to up to almost 7 different companies in Africa. It's always challenging to move manufacturing, but it's clear, depending on how this outbreak develops, we may well need to expand our capacity, and local production is always the key. So we are in discussions. Hopefully we can finalize those discussions in the coming weeks and then start really transferring the manufacturing, but it will take time.
All right. Paul Chaplin, we'll leave the conversation there. CEO of Bavarian Nordic, we thank you so much for joining the program, giving us an update on the ground, that production and delivery story. Folks, the Pulse is up next. Stick with us. This is Bloomberg.